Department have put forecasts of billions of dollars coming out, trillions of dollars within the next 3 years.
When you strip away the charts, the memes, and the hype, the story of XRP is really a story about utility meeting adoption at scale. In 2026, that combination is what could drive XRP into a parabolic move, and the key lies in how institutions and global payment corridors are quietly embracing it. One of the most overlooked aspects of XRP is its ledger. Unlike other cryptocurrencies bogged down by congestion or energy-intensive mining, XRP Ledger processes over 1,500 transactions per second with near-instant finality. That's not marketing fluff, that's fact. Think about what this means for 2026. Cross-border payments, enterprise settlements, and tokenized assets are only going to grow. Every time a bank or financial institution moves liquidity through XRP, it demonstrates real-world utility, not just speculative demand. And utility is what drives sustainable price surges. XRP's protocol also has a unique advantage: predictable transaction costs. Unlike Ethereum, where fees fluctuate wildly depending on network activity, XRP transaction fees remain fractions of a cent. For large-scale institutions or remittance corridors, this predictability is gold. When you pair speed, cost efficiency, and reliability, you get a network that doesn't just sit on the sidelines, it becomes essential. Another reason 2026 could be transformative is regulatory momentum. For years, XRP faced legal uncertainty. That uncertainty created fear, hesitation, and volatility. But now the landscape is changing. Global financial regulators are increasingly recognizing XRP's utility as a settlement asset, and legal clarity seems closer than ever. Think about the impact of that. Once institutions know XRP is fully compliant with global standards, adoption accelerates exponentially. Banks won't wait. Payment networks won't wait. Every corridor that hesitated because of regulatory uncertainty suddenly becomes open. And when that flood of institutional usage hits, the market doesn't just move, it goes parabolic. Here's something most people don't see. XRP isn't just a coin. It's liquidity infrastructure. Central banks, commercial banks, and financial service providers are already experimenting with cross-border settlements that integrate XRP. Liquidity moves first. Price follows. If XRP becomes the bridge for global liquidity, even in a fraction of corridors, it could trigger a network effect that drives both real adoption and speculative momentum. It's like watching a coiled spring slowly being compressed. Everyone sees the tension building, but no one knows exactly when it will release. That's exactly where XRP sits in 2026. Ready to accelerate with structural reasons behind the move, not just hype. Ripple, the company behind XRP, has been methodically building partnerships, not hype campaigns. From fintech alliances to corporate adoption pilots, every step strengthens XRP's credibility and utility. One key point: Ripple doesn't need retail speculation to succeed. Their revenue model benefits from network usage, settlement volumes, and enterprise integration. That means that even if traders sit on the sidelines, XRP's fundamentals continue to strengthen, quietly building the stage for the next price explosion. And when these fundamentals finally intersect with market awareness, you don't just get a normal price run, you get a parabolic move. Finally, consider timing. Historically, XRP has experienced significant surges when market infrastructure, regulatory clarity, and adoption readiness align simultaneously. In 2026, all three signals are converging. Network readiness: XRP Ledger can handle massive volumes with near-zero friction. Regulatory clarity: institutions are gaining confidence to onboard XRP without legal concerns. Adoption readiness: banks, payment providers, and fintechs are actively testing or using XRP for cross-border settlement. When these three factors converge, the market doesn't just react incrementally. It moves quickly, almost parabolically, because everyone suddenly realizes the asset isn't just valuable, it's essential. This is why 2026 could be a breakthrough year for XRP. But it's not magic or hype. It's structural, utility, adoption, real-world impact. The first thing to understand is that XRP isn't designed to be a speculative token. Its primary purpose is liquidity settlement. Banks, payment providers, and fintechs use XRP to bridge currencies instantly, cheaply, and efficiently. Instead of locking up massive amounts of fiat in multiple countries to facilitate transfers, institutions can use XRP as a bridge asset. Imagine a bank in Europe needing to settle payments in Asia. Traditionally, this requires multiple correspondent banks, reserve accounts, and delays of days. With XRP, liquidity moves instantly, costs remain minimal, and capital efficiency skyrockets. This is not theoretical. RippleNet, which uses XRP for settlement corridors, has already demonstrated significant efficiency improvements. And here's the critical part. As more corridors open, adoption grows exponentially. Every new corridor doesn't just add incremental demand. It creates a network effect. More liquidity means faster settlement, which attracts more banks, which increases usage, which further strengthens XRP's utility. This self-reinforcing loop is exactly the kind of structural setup that fuels parabolic price moves. Another major driver for 2026 is institutional adoption. Institutions have been cautious historically due to regulatory uncertainty. But as legal clarity increases and global frameworks evolve, the barriers are lowering. Large financial entities, from banks to payment processors, are beginning to test XRP for cross-border settlements, micropayments, and tokenized assets. Unlike retail traders who chase headlines, these institutions operate methodically. They test, pilot, and integrate slowly, but when they move, it's significant. Each enterprise onboarding translates into massive transaction volume, which in turn drives utility demand for XRP tokens. This is different from most cryptocurrencies. While retail excitement can spike price temporarily, institutional adoption drives sustainable demand. For XRP, this could mean a parabolic price move is not just possible, it's structurally supported by usage. Ripple's partnerships are another critical piece of the puzzle. Unlike many projects that rely on flashy announcements, Ripple has quietly aligned with key players in banking, fintech, and payment processing. From remittance giants to regional banks, Ripple's strategy focuses on integrating XRP into existing financial infrastructure, rather than trying to replace it. This approach significantly reduces friction for adoption and allows XRP to scale organically through real-world use cases. In 2026, this means more payment corridors, more institutional adoption, and more liquidity moving through the network. All factors that increase token utility and, in turn, create the conditions for a rapid market move. The broader financial landscape also favors XRP. With global liquidity tightening, traditional cross-border settlement is becoming increasingly expensive and slow. Corporations and banks are looking for alternatives that are instant, transparent, and cost-efficient. XRP fills that gap perfectly. As global institutions search for solutions to move money faster without increasing capital costs, XRP's settlement efficiency becomes a competitive advantage. That's not speculation. It's structural market positioning. One of the biggest advantages XRP has over other blockchains is scalability. The XRP Ledger can handle thousands of transactions per second, with near-instant settlement. This is critical for enterprises that cannot tolerate network delays, failed transactions, or congestion. Ethereum and other networks may handle decentralized applications well, but when it comes to large-scale financial settlement, XRP's infrastructure is purpose-built. Its speed, low cost, and reliability make it a logical choice for any organization serious about scaling financial operations globally. Here's where it all comes together. Every time XRP is used in a payment corridor, it is effectively consumed as a bridge asset, creating natural demand. Unlike speculative trading, this demand is utility-driven, consistent, and predictable. When institutional adoption accelerates in 2026, this demand isn't just incremental, it could be exponential. More liquidity corridors mean more transactions, which means more XRP being used actively. That's the kind of structural force that leads to rapid, sustained price movements, the foundation for a potential parabolic surge. 2026 is shaping up differently because all the elements are converging. Infrastructure readiness. XRP Ledger is mature, reliable, and scalable. Regulatory clarity. Legal frameworks are stabilizing, reducing uncertainty for institutions. Institutional adoption. Banks, fintechs, and payment networks are actively piloting and deploying XRP. Global liquidity demand. Cross-border payments, tokenized assets, and digital settlements are increasing. When infrastructure, regulation, and adoption align, it creates the perfect storm. Unlike previous cycles, this surge would be driven by real-world utility, making it far more sustainable and potentially parabolic in nature. XRP in 2026 isn't just a crypto asset to watch. It's the backbone of global liquidity corridors, quietly being integrated into financial systems worldwide. The next parabolic move won't be random hype. It will be the natural outcome of adoption, usage, and structural demand. The XRP Ledger has always excelled as a settlement layer. What makes 2026 different is the scale and speed at which new financial corridors are being integrated. Banks and payment providers are now using XRP not just for pilot programs but for live, high-volume transactions. Each new corridor represents more liquidity flowing through XRP. More liquidity doesn't just support transactional efficiency. It creates structural demand for XRP tokens, as they are required to bridge different currencies. The more corridors that open, the more usage occurs, and the more firmly XRP establishes itself as the go-to settlement network for cross-border flows. Institutional onboarding is accelerating. Large enterprises and financial institutions aren't influenced by FOMO. They adopt technologies that solve operational pain points. XRP fits that need perfectly. Speed, predictability, and regulatory clarity make it the natural choice for global settlement and tokenized asset management. As adoption grows, XRP's transaction volume increases organically. Each transaction generates real utility, creating a feedback loop. Greater adoption leads to higher liquidity demand, which strengthens network usage and positions XRP for price momentum. The difference between retail hype and institutional adoption is crucial. Retail pumps can be volatile and short-lived. Institutional adoption is sticky, creating sustainable, long-term demand, exactly the kind of structural factor that can trigger a parabolic price run. Ripple's partnerships are a major driver of adoption velocity. The company has formed collaborations with global payment providers, fintech companies, and regional banks, creating a network effect. As more participants integrate XRP into their systems, the value proposition strengthens for others. No bank wants to lag behind while competitors benefit from faster, cheaper, and more transparent settlement solutions. This domino effect accelerates adoption naturally. Each new integration doesn't just add usage. It amplifies the network's credibility and attracts more institutional interest. XRP's infrastructure supports rapid adoption. The ledger's high throughput, near-instant finality, and predictable transaction costs make it scalable for real-world operations. Unlike some other blockchains that face congestion during peak activity, XRP maintains consistent performance, making it enterprise-ready at a global scale. This technology advantage isn't hypothetical. Corporations piloting XRP report smoother operations, faster settlement times, and lower operational costs. When these results are scaled across multiple corridors and institutions, it creates massive transactional momentum, driving both utility and token demand. The real magic happens when adoption velocity meets market dynamics. In early 2026, XRP could see multiple factors aligning simultaneously. Rapid expansion of payment corridors increases transactional demand. Institutional adoption accelerates as confidence grows in regulatory clarity. Strategic partnerships amplify network effect, attracting more participants. Ongoing technological reliability ensures seamless integration. When these forces converge, they don't just move price incrementally, they can create parabolic momentum. Utility-driven adoption tends to have a compounding effect, especially when the network underpins real-world financial flows. While XRP's foundation is institutional, retail sentiment plays a reinforcing role. Once mainstream investors observe widespread adoption and growing liquidity flows, their participation can amplify the upward trend. This is the second layer of potential acceleration. Institutional adoption builds the foundation, and retail attention accelerates the move. Because the underlying demand is utility-based, the price movement is more likely to sustain itself rather than collapse after a pump. It's not speculative. It's the natural outcome of real-world adoption. Past XRP cycles were largely influenced by speculation and market sentiment. 2026 could mark a structural shift. Real adoption across multiple corridors. Increased transaction volume driven by institutional demand. Strategic partnerships generating network effects. Stable technological infrastructure supporting seamless scaling. Combine all these factors, and XRP's next surge wouldn't just be another short-lived rally. It would be the result of genuine network utility meeting accelerating adoption, a rare alignment in crypto markets that often leads to parabolic moves. The takeaway is clear: XRP in 2026 isn't just a cryptocurrency to watch. It's a real-world financial infrastructure asset gaining traction globally. The adoption velocity, network effects, and institutional integration all point to a scenario where a parabolic surge is not only possible but structurally supported. By now, it's clear that XRP isn't just another crypto sitting on the sidelines. 2026 could be a year where XRP transitions from being an under-the-radar financial utility to a parabolic market mover. And it's not about hype, it's about structural factors coming together. 1. Utility drives sustainable demand. The biggest difference between XRP and many other coins is real-world use. Banks, fintechs, and payment networks are not adopting it for speculative gains. They're adopting it because it solves real problems. Instant cross-border settlement, predictable transaction costs, and high throughput mean that institutions can integrate XRP without overhauling their systems. Each transaction, each corridor, and each settlement builds organic demand. Unlike coins that spike due to hype, XRP's growth in 2026 could be utility-driven, providing the foundation for a sustained and parabolic price trajectory. Institutional adoption is the secret engine behind XRP's potential. When a single bank begins using XRP for settlements, the effect ripples through its partners and competitors. That creates network effects that are far more potent than retail-driven price movements. In 2026, multiple institutions are projected to scale XRP usage simultaneously. Imagine dozens of banks across Asia, Europe, and North America running live transactions on the XRP Ledger. The compounded demand for liquidity can create a structural upward push in token value, which is the backbone of what many call a parabolic move. Unlike speculative rallies, this kind of growth is sticky. It's supported by real-world adoption, meaning the network isn't just riding market sentiment. It's underpinning it with utility and transactional volume. Timing matters. XRP's parabolic potential in 2026 aligns with macro factors in the global financial system. Liquidity corridors are expanding, central banks are exploring digital settlements, and global financial institutions are increasingly experimenting with tokenized assets. All of this creates an environment where transactional demand for XRP naturally increases, independent of retail speculation. When market participants see a growing network effect, their participation accelerates the price movement. Think of it like water flowing through a widening channel. The more the channel expands, the faster the water moves. In this case, XRP is the channel and global adoption is the accelerating flow. Ripple's carefully orchestrated partnerships also play a key role. By embedding XRP into fintech platforms, remittance corridors, and cross-border settlement systems, Ripple is ensuring that the network's utility continues to scale. Each new integration doesn't just add usage, it reinforces credibility and attracts further adoption. It's this compound effect, adoption driving adoption, that can trigger parabolic price dynamics. The combination of structural utility, network effects, and real-world adoption is rare in crypto, making XRP's 2026 potential especially compelling. Even though institutional adoption is the driving force, retail investors will eventually notice. Once mainstream media highlights banks, fintechs, and cross-border corridors using XRP, retail interest will spike. But here's the difference. This retail momentum is reactive to real utility, not speculative hype. That distinction matters because retail-driven pumps often collapse quickly, whereas XRP's growth in 2026 would be rooted in actual network usage. The combination of institutional adoption and retail awareness could accelerate a parabolic move without the extreme volatility typical of purely speculative rallies. Parabolic doesn't mean random or irrational. In XRP's case, it would result from expanded adoption corridors driving liquidity demand, institutional onboarding creating sustainable transactional volume, strategic partnerships amplifying the network effect, retail recognition reinforcing momentum. When these factors align, price doesn't just increase, it accelerates rapidly over a short period. And in 2026, all signs suggest that XRP is structurally positioned to reach that point. The next surge for XRP isn't a question of speculation or hype cycles. It's about infrastructure, adoption, and real-world utility converging in a way that's rarely seen in crypto markets. Banks, fintechs, and payment providers are quietly adopting XRP. Liquidity corridors are expanding. Transactional demand is increasing. Network effects are compounding. And retail awareness is waiting in the wings to reinforce the momentum. Put all of that together, and you have the perfect storm for a parabolic move in 2026. But unlike other pumps, this one would be grounded in reality, in adoption, utility, and institutional integration. If you're holding XRP, now is the time to pay attention. This isn't a guess, it's the natural outcome of real adoption and network utility converging. Don't wait until everyone else notices. Like this video, if you see the potential, comment your thoughts on XRP's 2026 surge, and subscribe to stay ahead of the next parabolic move. The foundation is being built quietly, but the results could be explosive.